none of us can know exactly when this thing is going to break out. But the point is, every time they knock it down and it bounces back, like you just mentioned, is more proof that it doesn't want to stay down. And I think that's very positive.
This week's specials with Miles Franklin Precious Metal Investments. 2022 Gold Britannias for only $79 over spot, and 2022 Silver Britannias for only $369 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Smith, the Senior Analyst at the Morgan Report. David, thank you so much for joining us today.
You bet, Elijah.
It's great to have you. And one of the things I'd like to discuss today is your latest article about really building a battle tank financially. Before we get to that, if you could give our viewers an update on the silver market. Last time we had you on, you said this might be the last, spike down in the metals, and then we'd be off to the races. Now, what we saw was a little bit another spike down. We saw about 2150 or so, and now we're back above where we were when we last talked. Where do you think we stand right now?
I think what's going on is a reconfiguration of the market in a way that is not too obvious to people that simply look at the spot price of physical silver. I was gone for about 10 days. I was up in Alaska, out of internet range and this type of a thing. And I came back, and last night I looked at my portfolio, and what I noticed was it was up quite a bit because certain stocks that had been really laggards had been building in or filling in a little. So there wasn't any big move, per se for the sector, but the stocks that had been a little on the weak side that were good stocks had been seeing buying, and there were several that had volume spikes. So I think that what we might call the smart money or the deeper pockets are taking positions, and they're not taking out Wall Street ads saying what they're doing. But the people that are waiting for that chart to erupt on the upside with physical silver might be missing the boat if they are not adding to the stocks that they like, waiting for that to confirm.
So it seems like maybe right now as we're seeing slow accumulation before everyone jumps in.
Right. And you can probably, talk about this with the premiums. I've been reading that premiums have been strengthening lately as well, too. Is that what you're seeing?
That's definitely what we're seeing, rising premiums, especially when we saw that spike down a couple weeks ago.
And it's just one more example of how when prices drop, the volume increases and more people buy. So, none of us can know exactly when this thing is going to break out. But the point is, every time they knock it down and it bounces back, like you just mentioned, is more proof that it doesn't want to stay down. And I think that's very positive.
No, your article about building a financial battle tank really drew some analogies between, a battle tank that will go into, that the military will use versus how we need to protect ourselves financially. The first point you talked about was firepower. If you could expand on that.
Well, I studied military history, and I got the idea of the analogy between the three imperatives of building a main battle tank and having it be successful in battle with holding silver. And the mobility, firepower, and protection are the three elements. And so the firepower that you just now mentioned would have to do with the concept of a asymmetric investment where a fairly small amount of money in physical silver, because we expect a very large move over the next 2 to 3 years, starting at any time, would give you the firepower that you wouldn't find, say, in a bond or in a savings account or something like this. And so that type of a thing would enable you to have a good chance of survival on the financial battlefield.
Why are precious metals, why do they have more firepower than, for example, stocks or bonds?
Well, for one thing, silver arguably is the most undervalued metal on the planet. I mean, you look at a chart from 1980 and today, and it's the only metal that has not exceeded its nominal high since that time, which is just crazy because it's arguably one of the two most critical metals in the metal space copper being the other one, but that has a different metric as well too. But when iron is up 700 or 800% in price from its 1980 high, and the others are up 300 or 400%, and silver is at 50% of its 1980 and 2011 high, it really doesn't make sense, especially when it's literally the critical metal for modern day living in just about anything you can imagine.
Definitely. So as we see it below its 1980 high, you've talked about before, I think, over triple digit silver. Can you make that case for our viewers?
Yes, I think that I've made the comment before that everybody knows the price of silver by looking at the COMEX or some other measurement indicator, but nobody knows the value because it's been suppressed and ignored for so long and assumed that it would always be that kind of a low price for producers and investors that a lot of people have lost heart or lost interest. But that's the type of circumstance that you want to find when you have this asymmetric reward potential where a modest amount could give you several times what you put in. I mean, talk about that with almost any stock on the board or bonds or anything else. I mean, where's that kind of potential? It's in silver.
Now, with respect to protecting the crew, how does precious metals, especially silver, protect the crew?
Silver, along with gold, is the financial protection for other asset classes that you hold. And so what we found in 2008 is just one example, is when we had the crash of all sorts of markets. Gold and silver originally dropped, but then they turned right around and came back up again. And also the paper price and the real price that you could actually purchase it for disconnected. So there was a price differential of up to $4 or $5 in silver, where it was trading at $9.50, but you couldn't pick it up for less than $13 to $15. The same thing with gold, which was $100 differential, and even platinum and palladium. So it kind of blunts the losses that you would have from other asset classes, even real estate, and plus it's so liquid.
Now, you talk about in the article how really it does protect against inflation, but it also seems to even beat other asset classes in some circumstances. For example, in the last 20 years, precious metals have outperformed the stock market by about twofold, I believe you said. Right.
And the most recent stats that I've seen, even the last few years being, a bit lackluster, or the area between 2011 and late 2015 notwithstanding, gold still compounded at an average annual rate of about 10%. That's really darn impressive. And I think most people that are in the S&P 500 only, or in 401k funds where others manage their money with regular stocks, would not believe that without looking at the chart. But when you look at that chart and you see the huge differential, it's really stunning. And it's done that in a manner that is unobserved by many market participants. I mean, you and I, that's our daily bread and butter. We follow these things, but really most people do not follow it like we do. And so they would be shocked to see that, and to see how just to say a 10% allocation in their own investing of it would have made a big difference and protected them in ways that no other asset class really does.
Now, some people might argue then, because it's outperformed the stock market, that it would be overvalued compared to the stock market. Your perspective on that?
That would not be the case, because it's playing catch up. It isn't like it's up 4 or 5 times like certain stocks are. It's still trading at half of its nominal value. So it's really got a lot of catching up to do. And what silver likes to do when it decides to catch up is it really goes, and there's none of this sitting around waiting for a retracement. When you wait for a retracement, you end up waiting for the intermediate top.
Definitely. And sometimes it's difficult to wait in those circumstances, right? As we've seen, for example, the last 10 years, gold and silver haven't done a lot. If you do look at a longer term view, they have rose significantly, as we mentioned. Your perspective on that, about waiting and really being patient, and what kind of time horizon should investors have in these markets?
I know a lot of people now have actually given up, and there are others that say, well, it's never going to happen. The price will be held down forever. But I don't believe that's the case. And the elements that some of which weren't even, considerations 5, 10 years ago, such as the green movement with the EV vehicles and this type of a thing, and carbon neutral. Everything is going that way. Silver is going to be a major, and is right now, a major player in that transformation. And to think that this is going to go on indefinitely, I think, is to be naive, to be charitable, and understandable, because it's gone on so long. And we've talked about these opportunities, which were going to have a silver blast off. And when they failed in 2011, I think people thought, well, it'll never happen. But buying in tranches, not over purchasing and not going on margin, this type of a thing, and just putting it away and not looking at it every day is the way, in my view, to wake up one morning and be quite surprised when silver is up $5 from the previous close, on its way to heaven knows how much more, in a way that'll be a one-time opportunity in our lifetimes. And there won't be an opportunity to sit around and wait for the next opportunity, because there won't be one.
And the last point you made in the article is that precious metals give you mobility. And that's really important when on the battlefield, to have options and to be able to move very easily and to be prepared for whatever comes at you.
That mobility plays itself out in an analogy as the ability to buy and sell in a very liquid environment. In fact, that's the double-edged sword of gold and silver, is that people sell what they can during a panic, and they can sell silver and gold just instantly. Try doing that with real estate. Try doing it with most stocks when the bid-ask spread gets really wide. And so they use that to cover their other bases when maybe they bought on margin and things like this. But the fact that gold and silver bounce back, shows you that safe harbor is always going to be there, and people buy it back as soon as they can. And even during the near financial global collapse in 2008 and into 2009, look what happened at the end of the year in 2008. About the only asset class that was up at all was gold, and it was up 4%. Doesn't sound like much, but when other things are down 25%, that's a huge deal. And in my writing of this essay, one of the reasons I wanted to do it and use this analogy, beyond the analogy itself, I wanted to get people to think about the fact that they are literally on a financial battlefield. It isn't to go out there and make friends with the different asset classes and be treated fairly. Everybody is out to try to make money. And if you regard yourself as a combatant on that battlefield, you will approach it a little differently than it's if you think there's no risk out there. And the fact is, there's always risk. There's risk in not being out there. So if you don't do anything, your risk could be greater than if you go out and make informed judgments on that battlefield with precious metals and mining stocks.
Now, many people today have been talking about how the financial battlefield now is very different than it's been in the recent past, that there are just more risks nowadays, and everything seems to be turning into very speculative. What is your take on that, and how do investors need to really shift their mindset and adapt to the new environment?
There are more risks in terms of government misallocation and the fact that interest rates are essentially zero, which they shouldn't be. It's just because interest rates inform the market as to what the value of money is in certain applications and certain projects. And the government has really, dropped the ball on this, and they're trying to give money to people without them giving anything back, and reallocation of resources amongst different groups of favored people. So those types of things are new in that they are more pronounced than they ever have been before, and the massive debts at all levels. So that's a new risk. But people need to understand, too, that the washout in 2008 and 9 cleared out a lot of the deadwood. There are many companies in the mining sector that aren't around anymore, and there are physical metals dealers that aren't around anymore because their books have blown up. And the ones that are there are still some people you don't want to deal with. But I think the odds of being with a competent metals seller are better now than they were 5 years ago. And the stocks that are available, many of the stocks are quality stocks if you do the research. And the amount of ability to do that research, on YouTube and listen to interviews and things like this is more favorable to the individual investor than it was 5 or 10 years ago. So they have more tools. They have to be willing to think and to work and to make informed decisions and to understand themselves. The saying that I love from from Sun Tzu is that if you know yourself and your opponent, you will be victorious in 100 battles. And your opponent is that financial battlefield that you're on. If you know only yourself, the odds are even. If you know neither yourself nor your opponent, there is great danger in 100 battles. So get to know yourself as well as you can. Keep understanding your opponent and the new elements of risk and reward that are out there, and then go at it from an informed position, knowing yourself, and you will be victorious in 100 financial battles.
All right. Well, we really appreciate you sharing that all with us. David, before we let you go, did you want to share with the viewers where they can find you if they'd like to learn more, and any last thoughts you'd like to add?
Well, I can be found on the Morgan Report. I contribute on a monthly basis to that. We also, when interviews like yourself, we put on David Morgan's free blog, and I write a monthly column for Money Metals, and I also write by invitation for the Prospector News about 4 or 5 times a year. And people that are interested in some of my writings in that regard can go to the Morgan Report /free report. And I think there are 5 or 6 reports over there now that they can just select and have sent to them in PDF form free. And I'm happy to disseminate that information and help other people make more informed decisions based upon their own information, plus maybe some guidance that I can give them to do further research.
All right. Once again, David, thank you so much for your time, and God bless.
Very good. Thank you too, Elijah. Have a great day.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.